Sir, now can we start, sir?
Yeah. Evening, guys. Mayuresh here. First of all, before we start, can you see me? Can you hear me? So if you can give me a few responses, that should be good enough on the chat, or you can put your hand up, whatever it is, so that we're just crystal clear that you can hear me and you can see me very, very clearly. A few more responses would be appreciated so that we can get a fair idea that the bandwidth is and network is not an issue, right? Perfect. So there are a few folks still joining in. Let's give them a minute so that everybody who's in the pipeline can join in the waiting room.
Yeah, I saw a good participation today's meet. I think.
Yeah.
Yeah.
So there's 20-30 more seconds. I think a few more people in the waiting room.
Yes.
Mr. Brahmachari. So I think we should just start in
Yeah,
less
yeah.
than less than a minute. Perfect. I think let's start. It's 4:38. Good evening, folks. This is Mayuresh Joshi uh, from Marketsmith India. I've got a very special guest with me today, Toviti Brahmachari. Though Mr. Brahmachari does not need any formal introduction, I would still love to give introduction for all the persons who are probably new to the market. So Mr. Brahmachari is a renowned technical analyst. He's a founder and chief mentor of the Indus School of Technical Analysis. He has trained over 5,000 traders in technical analysis all over India. He's also a partner in Velocity Analytics and head of research in Velocity Consultants. They've got almost 300 crores in terms of assets under management. He's also a certified research analyst. He heads the Association of Technical Market Analysts at the Hyderabad chapter for 3 years. He also contributes tons in terms of paper publications and media publications as well. And he's part of the Dalal Street Investment Journal as a consultant research analyst as well. So Toviti, many thanks for joining us on this special leg of the webinar, specifically after the budget. Thanks and welcome on Marketsmith India's webinar and podcast.
Thank you very much, Mayuresh. Thank you very much for the introduction. Nice introduction. I think today's participation is also good to know about the market participants, particularly on the post-budget market conditions. Thank you very much. We can start the discussion now.
Absolutely. So I think let's directly jump in where the crux of the topic is, the post-budget discussion. It's almost been a week since the budget is over. We also had an RBI policy meet in the interim. So I'll come to the RBI policy meet in some time. But when it comes to the budget, obviously I think the expectation was of a few analysts that the budget might be something like a pre-election cursor. A lot of freebies can get announced. But the finance minister of the Exchequer kept it very, very concise and no freebies was allowed. So the first aspect of the budget in terms of the fiscal roadmap, how do you see that? Have the markets taken that positively? If yes, what are your contours related to that?
Yeah, it's a positive for the overall structure of the budget because finance minister has in a very limited scope to do many things. If you compare with the normal budgets, generally it extends about 2 to 2.5 hours speech in the any budget speech, any normal regular budget speech. But because it's in a water account budget, it was limited to 58 minutes, something else. So that that's a brief presentation which can brief exercise of the budget, which is in a water account or it's in a time being for the next 6 months until the new government forms. So this budget will give you a roadmap for the next what they are going to do next 1 year or something. But there are no clear, there is no proposals at all on the parts of taxation or some other thing. We can look at this budget as a just expenditure and the revenue outlay, so that even in that also we can get some clues on that what the government is preferring or what the government is going to do in the next due course of after the elections or before the election results comes in, the new government forms it. But if you look at the overall budget, there are several positives in the market in the budget. First thing is their revenue and the capex for the both are increased, and the spending also increased. And particularly, there are several sectors going to be benefit more than double than the previous year. That's a major point. First thing, the receipt, other than that, excluding the borrowings, the receipts were the revenue, the main the revenue, the receipts were increased by 11.8%. That's in a budget estimation. So, which is a huge jump in the receipts because of the tax revenue was also up. The taxation policies and the taxation, including the GST and other tax policies, were or didn't touch, but they were streamlined for the last 2 3 years.
Yeah.
Particularly when the new regime has come up, the new corporate structure has come up, the all the taxation or tax part has streamlined. We can say that streamlined in the last 3 to 4 years time. So that streamline is giving a good results because the tax revenue was increased a lot. So that will, even if you don't touch the taxes for the next budget, the next full budget. Anyway, this time they cannot do because of the elections for there. So if at all they don't touch any taxes for the next full budget, even then the tax revenue will go up. That's a major positive because of the revenues are coming up to the government. And at the same time, if the revenues are coming up into the kitty, then automatically the government will intend to spend more and more money, and they can reduce the financing costs like borrowing costs also. So that's a major advantage of this budget because of the revenues are growing. And the gross tax revenues are grown by 11.5%, and the all the net tax revenue is almost 12% up. So this is the major push for the budget government, where if the revenue is there, then automatically your spending also will be more. That's a major positive. And what the other sector wise also we can discuss, because there are sector allocations like 11% to the increase into the defense sector, and there are several like green energy and the
Sure.
hydro. These are all the major, I think, push to the industry.
Sure. So we'll come to the sectors,
Yeah.
Mr. Brahmachari. So I think the point that you alluded to in terms of the revenue target being on track and
Yes.
expected to grow at a decent pace should ensure that the fiscal deficit targets are met.
Yeah.
My question now to you is the government a little bit more conservative in terms of the target setting itself? So they have assumed the nominal GDP of 10.5%.
Yeah.
RBI reiterated 7% yesterday in terms of real GDP growth. And tax
Yes.
collections, they are assuming a little bit lower compared to this year. So is the
Hmm.
government trying to play a little bit conservative, you believe?
Yes. There are two reasons for that conservativeness.
Okay.
Second, the first thing is the conservative is the if the government comes again back to the power, then they may have aggressive. How what generally the first budget of the new government will be little aggressive in nature. Before the budget, any government, if you take it, all the vote on account budgets were cautious and the little conservative one, because they cannot go aggressive in allocations, aggressive in the spending, aggressive on the welfare basis. That's one reason. The second reason is the tax revenues. If you look at the tax revenues, it was up by almost 11.5%. Gross tax revenues, including the direct and indirect taxes. So probably if the next budget uh, rejig the tax structure like direct taxes or the GST thing, then automatically what will happen is the gross revenue of the tax revenue will go up from anywhere from the 12% to 14%. 2% increase in the tax revenue will result in many other measures. That is what the second reason is the conservative in the vote on account, but that's an indication to be aggressive in the next budget. Most of the cases it happened earlier also. Normally the pre-election budgets, normally they don't be aggressive. Even if you look at the last year's budget also, not aggressive as aggressive as the 2022. So that's the reason. So these are the reason to be conservative in the market, conservative the budget.
Fair enough. Now, one point that was absolutely missed out in the budget, Mr. Brahmachari, is for the salaried class. Nothing
Yeah.
was announced. You think that's a
Yes.
disappointment or something will come?
No, it's not at all a disappointment. Government never ever the governments have never changed the personal taxations in the water and account budget. If you look at the history, no government changes the personal taxation because it is an election motive. So it is a bigger vote bank of the salaried class will affect that. That will be influenced. That's the reason no government will touch the personal taxations in the water and account budget. That's a limitation. Even if you look at the past histories also, no vote on account budget touch the personal taxation. That's not a disappointment, it's a rule.
Fair enough. Fair enough. And now let's come down to the aspect where the spending mechanism was
Yes.
deliberated upon. You deliberated in your opening remarks a few sectors where allocation has happened.
Yeah.
So you want to dwell a little bit more in terms of allocations and whether those allocations are
Yes. Yes.
appropriate in your opinion.
I have a data here actually. If you look at the railways were one of the major sector this budget has allocated more than 5% of the previous budget. Even in the water and account budget also, they have allocated more than 5% of the funds to the railway sector. That is one area. What they will do in the railway sector, we can discuss it later. And then the housing and urban infrastructure also allocated very a large amount of funds, about 11.9%. That means urban infrastructure is going to be improved, and the housing sector and the construction sector is going to be benefited out of that. And the communications sector is got about 11%, 11.8% more funds than the last budget. That means not communications is not only the telecom, the communications also defense communications and the defense radar communications. These are all the part in that. That means communication plus if you look at the defense, these two together have almost 22 to 23% of the allocation. That means it's going to be a very big sector, going to be two sectors. One is the defense, the other one is the communications. The third one is, as I said, is urban infrastructure. And the fourth one is the railways. These are the four sectors going to be benefited because of the higher allocations. Yeah. And
Now,
the
sorry.
roads and highways also there was a little allocation was increased by 1% to the highways and the road transport. That is another area to be watched out.
Perfect. So with the capex that is announced, I think a large part of the market, as
Yeah.
historically seen, when markets go into an election mode, or when the nation
Yes.
goes into an election mode, the next quarter the markets are assuming that the order activity will stop. Do
Yeah.
you think that makes a lot of difference for the capex that is announced for the capex or the infra-oriented sectors?
Yes. Capex is one metric where how we can grow in the next 1 year. Unless there is a capex increase, we cannot grow or we cannot meet the targets of GDP or whatever the growth rates we mentioned about that. Capex is always a better thing. Normally, this is little higher than the previous capex capital expenditure by 17% over the past uh, few years. Uh, about 17%, yes. So of the 23-24 year, so that means it's a huge jump in the capex plans. Anywhere capital expenditure increase in the sense they are going to have a more developmental activity or not the welfare activity. Welfare activities has a different budget allocation, but if you are allocating the capital expenditure means that is going to have a developmental more on it will fuel the development more and more bigger phase or bigger pace also. So faster pace, we can say the faster pace also. So the capex definitely it is going to be a positive effect on the development, overall development, not one or two sectors, overall all infra whatever the means of the development you carry all the sectors will benefit from the if you increase the capex.
Perfect. Makes absolute sense on what you're saying, Mr. Brahmachari.
Yeah.
The
Yes.
allocations towards defense and railways, right? I mean, that was expected to take place. So, do
Yes.
you think the markets have now factored a lot of the play in terms of what can come through for defense and the railway stocks, or do you think there is more steam left?
Yes. I think there is more steam in these two sectors. The first reason is defense spending will never stop. So if you compare with the last 50 years of the budgets, every year there will be increase in
Okay.
the defense budgets, right? Railways has a new area of concentration now in the market. The reason is recent the activity is happening, the changing the bogies, new
Yeah.
speed rails, and there is new lines are coming up by various places, hilly regions like Uttarakhand and other places, and there is going to be more Vande Bharat trains, and the more bogies are going to come into the place. And this is the sector, railway sector will definitely will have a new projects to come. Not only the super speed railway tracks, at the same time, the new bogies, the new demand will be there. And the other way we can look at is it's going to be alternative for the airlines, because airlines is now uh, if you travel from Bombay to Pune in an express, and the Bombay to Bangalore in a train or something else, it takes a lot of time. So if you are able to reduce the time of the journey, it is almost 2 hours waiting and 2 hours travel, and again reaching the city will be
Correct.
taking the same thing, so that they will improve the speed rail thing into the railway sector. That is going to be a new tracks are going to be announced in the next budget. At the same time, the privatization of the routes, that is with some other regions, it was stalled in the 2021 and 22 year. So that is going to come up in the next budget. I am expecting that there are several other companies are also in the foray, including one of the Hyderabad-based company, and there are several based companies. And the wagons are going to come, almost 45,000 new, new bogies, and the new wagons like for the transportation of the goods, and the dedicated corridors going to be increased. I think there are several new projects going to come in the railway sector. That is one area. To be precise, in the defense sector, defense, not only the ammunition part, there are several defense manufacturing privatizations have already happened, including the refills and other ammunition parts. And there is going to be defense communications like radar frequency, and there are several frequency, including a GPS, new GPS is going to come, and more and more location-based services are going to come. So that is going to be one of the area, including the vehicle part also. The defense vehicles are manufacturing now, where few companies, listed companies in the Indian space, that is going to be increased by capacity wise also, including the defense vehicle mechanism that includes the earth movers also. So that these two sectors will benefit the new projects, the new area. At the same time, uh, I think more technology driven services will come into the defense manufacturing part. That's
Okay.
my take on
So,
these
so
two
drone
sectors.
technology and all that stuff, is that what you're talking about?
Yeah, both, even drone and the robotic
Yeah.
technology also.
Okay.
So I think because of that defense matters are concerned, that the drone policy has stopped for some period. I think
Right.
they are going to come up with a new drone policy where the some of the restrictions because of the defense keeping in the mind.
Sure.
So I think that will under what to use, where to use, what not to use, where you cannot operate the drones. These are the things to be come up with. I think the next uh, full budget. I think by the time next 6 months, I think we may get a clear policy on the drones.
Perfect. Makes sense. So, from a overall budget perspective, so what's your key takeaway? I mean, two or three key takeaways from the overall budget, so that then we can move on to sector and sector analysis and
Yeah,
stock analysis.
the key takeaway is that government is intent to fast track the growth. That is one area. Because of their intentions were very clear about the expenditure part and the allocation part also.
Sure.
These are the, I think this is going to be growth driven. So growth, keep in the mind of the fast track growth. They have already hinted several allocations in this budget, and they are going to be streamline the some other revenue part also. Not only the taxes, there are several other revenue models are going to come up with thing, because of the this digitization of the several activities of the government activities was digitalized now. So with the digitalization, there will be more and more streamlines will come. Suppose if you look at the FASTag, if you compare with the 4 years before stop FASTag and the now the FASTag, the revenues are grow up. So this kind of streamline of activity will definitely increase the revenue of the governments. So that streamlination of the tax revenue, whatever the revenue sources government has, these will be included, increased or streamlined by the next budget. So that overall the growth is the keep it. Finance minister is very clear about the growth. So for that growth, what to do? She mentioned very clearly that. At the same time, his in her budget speech, she mentioned about the what they did in the last 10 years, and they have compared with the before 2014 and after 2014. What are the growth parameters, the growth metrics they have derived, and everything they have very clearly mentioned within the brief speech. So if you look at that speech itself, is government is interested to push the growth forward very fast track manner. That
All
is
right.
my take.
So, how do you rate the budget out of 10, Tobit?
Out of 10, because it's in a what an account budget, very limitations are there. We can rate because within that limitations also they
Yeah.
have made some allocations very aggressively. We can say aggressive only because the spending for the communication, the spending for the defense, the spending for the that green energy, the spending for the urban infrastructure is little more than the expected one. So I can rate this what on account budget as 8 out of 10. The two is also because of the limitations. Because of that 2 marks is not reason here is because of the limitations they have before the elections.
You're being a very liberal headmaster, Tobit, I would say. So,
Thank you. Thank you.
now let's directly jump on to key sectors.
Yeah.
In the course of discussion, you did mention railways, defense. So let's bisect and dissect a little
Yeah.
bit more on this. So let's start with railways. Uh,
Yeah.
One section of the market believes that these stocks have run up too much, whether
Yes.
they're the wagon makers, where they're the locomotive manufacturers, whether there are the train signaling manufacturers, or even the
100%.
anti-collision system makers. So
Yes.
within this space, are there some stocks which you feel, which you can discuss, can still do well at the current level? And if yes, which are those?
Yes. Because if you look at the CPSC and PSC
Yeah.
indices, because they are the benchmark for the PSU segment, right? They rallied almost 500% in the 4 times in the last 1 year, recent close, if you can say. If you look at some of these stocks like RVNL, RARFC, and whatever the railway stocks, the minimum is rise is 200% to 500%. They have become a multi-baggers in the last 1 year. There is no doubt about that. So normally, what O'Neill's philosophy is buy at the strength, okay, sell at higher. That's a philosophy. But now there must be some retracement for the from profit book may come because of the normally historically pre-elections before the elections market consolidates. This consolidation will be, I think I'm expecting till April beginning of next 2 months market may consolidate. In this consolidation, the portfolios rejig will happen. Whether it is railways or other stocks doesn't matter because of the high thing. I think more profit booking may come in the railway stocks. I think, but still there is potential like wagon manufacturer, wagon or bogie manufacturers, wagons manufacturers, like the even the railway route construction companies like RVNL. These have some potential. Like there is a wagon companies like uh, JWL is also there. Jupiter Wagon, which is in the private sector company, that also have a potential to move higher. At the same time, the one company which is still have a potential, though it went up from sub 40s to 170, that is IRFC.
Okay.
Because it doesn't have any NPS, it doesn't have any interest burden on them, and it doesn't have any employee burden on them because it runs less than 20 people the company. They acquire, they mobilize funds from the government, they repay to the government projects. There is very limited space within the NBFC, within the financing sector. So they have very limited thing is IRFC is one other stock which can we do. And the communication part we can say is there are companies like Ircon and Rights and other companies are there. the PSU sector itself. So these stocks can be accumulated at the lower level, means consolidation. But normally every impulsive move, what we can say is now what we have seen in the last 1 year is impulsive move of 400% in all these PSUs. After this huge PSUs, normally consolidate between the retracement will be come down to 38% to 23.2, 38% retracement will come. I
Okay.
think you can calculate stock by stock, we can say. So that consolidation will be giving you a good opportunity to re-enter or accumulate the stocks in the thing. And you can add up after the breakout also. So I think these stocks will give some kind of consolidation first, and then the post budget or the post election results and the next budget may rally a bit. But if you have a view of next 1.5 to 2 years time, that is, I think 18 months to 2 years time. So first 3 months is little consolidation phase. The after that, the post election or post election results or the post new budget, definitely there will be a second leg of rally. I think that is going to be this consolidation phase. If you have a patience, you can accumulate in the consolidation, the decline. And if you don't want to take that risk, that patience loss, then you can have a this consolidation base breakout. I think expect at least another. I think now we are in a February. I think at least another 8 weeks to 10 weeks, maybe consolidation will be there. That's my because already started the consolidation. If you look at the PSC index today, on a weekly chart, it has formed a indecisive candle with a small body. That's an indication of we have rallied a lot, and that say there is some tiredness in the overall PSU space.
So does this hold true then also for defense and also for PSU power stocks?
Yes.
So HALs, Cochin shipyards of the world, Mazgaons of
Yes.
the world, or PFC, RECs, they had a good correction today.
Yes.
So does that
Yeah,
mean the
including
similar market
the
approach?
defense stocks also. Even GRAC also there is a
Yeah,
very decent correction, and I think there is one defense manufacturing company, including the vehicles and other thing, that is BML,
yeah,
which have listed for the disinvestment for the I think for 3 years ago. It's for some reason that was stalled because the valuation part. It was when it was stalled, it was around 1,300 rupees. Now it has gone up to about nearly 2,000 rupees. So that stock is going to, because it's a defense manufacturing company. They do earth movers, they do high powered vehicles and other things. I think if at all the government begins the disinvestment process next year, though they didn't mention any target for the disinvestment for the next 1 year, I think the defense sector manufacturing companies like you, what you mentioned is that is going to be one of the biggest thing. HAL has a major potential because yesterday it was broken out, but it was retraced today after 5 weeks of consolidation. It was broken out yesterday, but it is back to into the within the breakout level. I think that will consolidate for. I think it's a very small consolidation of 4 or 5 weeks. I think normally, as a O'Neill's methodology, it must consolidate for at least 7 8 weeks of
correct.
the flat base. So that 7 8 week, maybe another 4 weeks is going to be crucial for HAL. I think there is another company like shipping companies you mentioned about the Cochin shipyard and the GRSE, Mazdok. Mazdok is also shipping company. I think these are manufacturing the these suppliers are the defense only. And there is every company has a very decent order book from the defense ministry.
Correct.
At the same time, there is going to be another electronics part. Those companies are manufacturing the defense electronics and the defense communication materials like MTAR technologies. And there is one more company called recently I've seen that Astra Micro. These kind of stocks are manufacturing the radio frequency and the technology part and some uh, uh, what we can say is equipment, original equipments to the defense sectors. I think they are going to make a very good comeback in the next 6 months to 8 months period.
What about power then?
Power, yeah, last apart from the PSU and railway stocks, power sector stocks have rallied a lot in the last 1 year.
Yeah.
Particularly power infra and power equipment companies have rallied a lot.
So
Not the
PFC, REC, IREDA.
yeah,
So I think
yes,
that's where
exactly.
the juice was, right? And
Yes,
other
yes,
companies as well. They've run up as well. So what about the
yes,
sector
yes.
as a whole?
As a sector, I think it is also consolidated for some period. As a broader market, if it is definitely outperform. If you look at the relative strength for the sector, I think it is going to be. It is already outperformed the Nifty 500 index or the other broader indices. There are some companies like PowerMech. That is one company where I think we have recently. I think there are left several consolidations. I think it is in the base three. I think now.
Yes.
I think base
Stage
two.
three. Stage
Yeah,
three.
yeah, base three. So that is going to be once the that breaks three is over, then I think we can expect another base up to four before it comes to the stage three. I think we can see a big rally in that companies like that. Recent today, PFC has corrected, REC also corrected today, and the power grid also rallied a lot and corrected. NTPC is also consolidating now. I think all the power company, Adani Power is one company where it is breaking out because it has some other revenue model and that they have a EBITDA increase of, I think EBITDA or a PBT increase of 1400%. That is going to, that earnings boost is going to come a positive play in the Adani Power. So in the private sector. And it has moreover it has broken out of I think 8 week consolidation was it's an ascending base in that, so that will have a rally, another 10 to 15% rally from the current market prices.
Fair enough. Now, the other sector that has done exceedingly well is the real estate space, Toviti. So,
Yes,
what is your
yeah,
call? Real estate
yeah.
players or now the ancillary players like
Real
plywood
estate and
companies?
infra also, these two sectors has to be watched very carefully and very we can say that after 2008 and 9 fall, it was consolidated for 13 years. This 13 years, if you look at the yearly chart, the last 13 years consolidation of stage one has broken out very recently.
Yeah.
Yeah, these two sectors. After that breakout from the bottom, it was actually, if you look at the correction from the 2008 top to the bottom, it was corrected by 98%. So, which is huge correction. Anything corrects in the bear market, 80%, more than 80%. The base, stage one base is very crucial for that sector. So these two sectors has broken out of the base one, stage one base of 13 years, which is very impulsive rally is going to come. I think we have already rallied about 200% from the bottom from the stage one. I think first base will come now. In the next 2 months, first base of the stage two will come in these two sector indices. I think there is all the market leaders, including a DLF, is touching the new high.
Correct.
Though, yeah, though realty sector is still 23.6 retracement level, but the DLF is already all-time high. You look at the Anantraj and Prestige Estates. These are the real estate companies. NCC. Look at the NCC also. It has crossed already from 60 rupees to 220 today. So these all stocks will rally further, and they will reach the more above the 2008 high levels.
Or
That is
even
my,
further from these level, you're saying?
no. Normally, see, we already broken out of the stage one. Now we are in the process of in the transition to the full-fledged stage two rally. There will be one base. That base will be now. I think it is began now. That base will take another 2 months to do. After 2 months, I think we'll get a fresh opportunity in these two sectors, infra and this thing.
Really?
And ancillary industries like cement, steel also will part in this thing. Because without steel and cement, no infra, no construction, no realty will come. Once this picked up, these cement and steel sectors also will be more. And there is more and more thing is more ancillary industries like consumer electricals and the and the like tiles industry like APL Apollo and other thing construction materials, and including that the construction activities goes up, then the AS action construction equipment which supplies all the construction equipment is already at the new high today now. So these allied sectors also will move according to the infra and realty sectors.
Makes sense. Absolutely makes sense. So within infra, what are you looking at? Is it the capital good companies? Are it the manufacturing companies? Is it the road companies? Any particular ideations within infra as a theme?
Yes. I think there is in recent water account budget, there is some focus on the housing sector, housing and urban infrastructure. In the housing sector, I think there is more and more government housing projects going to come. I think they will benefit from that. I think roads still have a potential, have particularly highways and state highways has a more potential, still have a potential. I am more concentrating on the construction companies in the housing sector. I like NCC, like DLF and Prestige. These are all companies. But remember that unless until there is a growth in the earnings, I think where there is a cycle, positive earning surprises must be there within a higher return on equity. Then focus on those stocks only. But infra segment, I think road projects is have a very good companies. And allied sectors like cement and steel manufacturing leading. And like yes, is the one thing is there, and we can concentrate on that. Uh, I think that is very uh, more and more bullish sector is that one. That the next sector, yeah. Are you able to hear? Mayur?
Yeah, just a second, sir. Myrish is doing joining
Yeah,
platform.
yeah. Any queries also we can take. Some of few queries we can take from the audience. I think
Yes.
there are very enthusiastics also.
Yeah. So Dharmashekar, looking for the oil sector.
Oil sector, yeah, energy, oil and gas sectors. Recently, I have studied two, three companies about them. Some of them are underperforming the when you compare with the oil and gas sector index, benchmark index. Except Reliance is going to be multi-year breakout. That means 87-week breakout has happened 5 weeks ago. It was rallied a lot after the breakout. And there are some, I think it will consolidate for some period and move away. And there is gas sector. I think ONGC is a good bet at current levels. MGL is taking care of. I think it is trading at the high compared to IGL. IGL is still in the lower lows, lower highs formation, but MGL is already at a new high, which will have a thing. So there is, I think these sector. I think be with the leaders like GAIL and Reliance and MGL. These are one is completely a multi I can we can say well diversified company like Reliance, and the other thing is MGL is a pure gas player, and the second thing is GAIL is another gas player which have a gas infrastructure also builds up. So these are the things we can have. But retailers, I think BPCL and HPCL is doing well.
So
Uh, ins-
any insights of banking sector?
any interest?
Any insights of banking sector?
Yeah, banking sector. I think HDFC Bank a leader there, but it is completely down after recent fall earnings. I think it may test the 1365 below 1400 levels, where it has a very strong support around 1365. I think that will be the very good accumulation zone for the stock. So whereas now currently it is still, even though today market the bank nifty has rose more than 1% today, up by today, but HDFC didn't participate in that. That's a weakness in the stock. So wait for some base formation after big decline. So it's not in a buying zone now. So it has to be form a base after the very big earnings decline. There is one query came in pharma and IT. Yes, I think these two sectors will play as a defense for the next 3 months. I think I have recently tweeted about IT index, which have stage one breakout has already happened, and the stage two first base is already broken up. So my target for the next 1.5 year to 2 years target for the IT index is 56,000. Currently trading around 38,000. So that is the potential in the IT sector. You whatever the stock you like, you just accumulate them. Like in the sense, you must have some earnings growth must be calculated, and relative strength compared to the IT index is going to be compared, and then go ahead with the IT stocks. Some of the top 5 stocks you pick, and you can also uh, build a portfolio with IT specific portfolio. And in the pharma sector, already all the stocks are in the new highs, like Dr. Reddy's is near new high, Aravindo is near new multi-year high, Sun Pharma is already at high. Recently, Glenmark has broken out, but it is consolidating again within the breakup jump. And there are several mid-cap pharma stocks also doing well, like Zydus Life is doing very well. So that is going to be best sector going to be play defense role in the next 6 months to 1 year.
Yeah, sir. Tejas, let me ask one more question.
Yeah.
Steel sector in mid cap or large cap, which we can expect?
Yes, steel sector you can be with the large caps only because who have a capacity, who has a higher capacity, who has a larger capacity expansions or plans, capex plans in the steel sector, because we are expecting the infra and construction sector, realty sector is going to be very positive for the next few years. So unless until there is some requirement from the steel and cement sectors, I think these two sectors will not grow. So be with the uh, big sectors, big companies like Tata Steel and the Jindal Steel, JSW Steel. These are the manufacturers and they have a higher capacities. Be with them. So I think be with the large companies only in the metal sector, particularly steel sector. You asked about the steel sector. Be with the large players only. There is no scope. I think there is very little potential in the mid and small cap steel stocks.
Views on small finance banks, sir.
I think they have. Don't be specific with small finance banks. I think they are all in the whole. All we can say it is in a gambit of banking and financial sector. Within the banking and finance sector, don't be very specific about small finance bank because they haven't outperformed. If you compare with the banking index or the financial index, they underperform. So that underperforms, as long as that underperformance continues, better not to be part in our portfolios. You may have some positions, but it is not specific portfolio building on the basis of small finance banks. I think it's better to have even in that space also. If the it is outperforming bank nifty, then go ahead with that. So that's not a very good idea to accumulate the small finance banks now.
Sure. Toviti, sorry, I think I had
Yep.
some technical glitch, so I
Sure.
got logged off for a few minutes.
Yeah.
But let's
Yeah.
come back to the question answer sector session. And anyway, we're covering a few sectors which I anyway wanted to discuss.
Yeah.
So Mohammed Falil had asked a question about chemical sector and what kind of a subsector within that will be good. So chemicals have got beaten down quite honestly in the last few quarters. The numbers
Yes.
were not fantastic in the last quarter as well. So what's
Yes.
your take? I think you wait and watch, or do you go for
Within
some
the
specific?
within the chemical sector, there is specialty chemicals is one segment where we can see that like HSCL is one stock, and
Okay.
there is one more stock called even the carbon block also that comes under PCBL, Philips Carbon Block.
Okay.
These have, I think, potential to grow up. I think HCCL is in, I think it is about prior high now. I think it is moving higher and higher now. I think these specialty chemical segment have a little potential still within the chemical sector. Because I think other sectors like those who manufacture to supply the pesticides and the fertilizers, I think that has a little shaky thing now. I think stick to specialty chemical sectors now.
Sure. What about FMCG? Because that sector has really done nothing in terms of.
Yes, that is underperformed if you compare with any other index, not only the broader market index. If you look at the HUL, which is a big player, big market cap company, and big company, in any time, I think it is nothing. It hasn't given any returns to the investors. HUL. Look at the Nestle and the Colpol falls yesterday and this week fall. I think they are also underperformers. If these three big players are not performing, including the Britannia, if these are not performing, I think that sector is going to be very underperformer for the if you compare with the broader market. FMCG hasn't given any. Even if you look at the RRG charts, look relative strength or whatever it is, I think it is in lagging quadrant. So I think FMCG is one company, one sector which is concerned for now in the whole market gambit. I think now I am worried about some of the big players like Colpal, Nestle, and HUL.
So they will underperform, you're saying.
They will underperform. Underperform is continuing for the last 2 years, not now. So once that 2 year breakout happened, I think there is nothing will happen in this sector.
And what about ITC? Because a lot of news is coming in that British American Tobacco
Yes,
might
ITC
sell.
also broke down. I think ITC also broke down. Once I was very bullish on ITC. I think ITC, it was consolidation breakdown has happened. I think that was it's a like a descending triangle kind of pattern is there. And in ITC, I not comfortable at this level, including what I said about all other companies. But ITC is also, I think they have a plan to, I mean, separate the hotels and other company, other segments like thing. I think that may have some impact on uh, uh, future. But now it is not in a buy zone, definitely.
Yeah, I think it's breaking down. So even if you look at the O'Neill parameters, it's broken
Definitely, it
down
is not
all.
in a buy zone.
Yeah,
Yeah,
so below pivot levels, broken down all
no,
averages, so on and so forth.
no, not at all.
So exactly. So I think there is one question from Parag, which is supplemented by one more user. A view on fisheries, because there is some announcement made on fisheries, aquaparks, so on and so forth.
Yes,
So your
yes.
views on that sector and specifically Avanti Feeds.
Avanti Feeds is it supplies to the aqua companies, that feed company basically. Uh, they have a very, I think in the previous it has given a multi-bagger returns in Avanti Feeds. I have to check the chart from that. I didn't track that actually. I can say that 1 second. Avanti Feeds is once it was a very favorite stock. Actually, if you look at the chart, it is consolidating for the last 4 weeks. I
Correct.
think before that it was rallied a huge from about 450 to 600 range. So I think it will consolidate further, but the price strength is little poor, around 56 now in the uh, thing, and the volumes are declining for the last 4 5 weeks.
Yeah.
Even the rally was a very huge rally, but it was not sustained for that now. Somebody is asking about the Paytm. I think so.
So I think the governor got asked multiple times.
Um,
So Thoviti, he,
yeah.
he saw this one.
See, what I can say is earlier it was highly priced. First thing is it was highly priced in the IPO. That is one reason. The second reason it was broken out the IPO base breakout also, but it sustained for few weeks also, few months also. If you look at before this fall, there was a counter trend rally was there for almost 5 to 6 weeks in
Yeah,
between December period. So that was the current counter trend rally to be. It was given a exit chance to all the investors who invested in that company.
correct.
Now it is an all-time low. Okay, it is all-time low, and it was declined from the IPO price to now is 75% decline. You can say it now, and there is no signs of basing form now. Still, it is in a declining phase. So until unless the declining phase is over, has to form a base at least for 6 months to 1 year base. Otherwise, I don't trust that company. I don't enter that company first thing. Even if you are investor, you are already invested in the IPO or you are already invested in the little higher levels, about roughly about nearly 800 to 1000 levels, then you cannot book loss of 60%, 50% losses. So I don't suggest to book 60 to 50% losses, but wait, your patience has to be tested here. The patience testing is next 2 3 years, not now. So if you don't have wait till 2 to 3 years, then better book the loss now itself. In that base, once that if you recognize that for stage one base is completed, then you start accumulating at the lower levels and average your price. Then you will get a return after 2 years. That's an idea, but not for a fresh buy. It is not a buy.
Perfect, makes sense. And for users who are new to this concept of what stages are, you can go onto
Yeah.
our MarketSmith site. There is this learning article on how stages are formed. What is
Yes.
stage one, stage two, stage three? What is extended levels? There are a lot of learning articles, so that can just simplify the stage elements that Thoviti is talking about. I'm not too sure whether you want to talk about stocks like a Lincoln Pharma. I think some users have mentioned that. If you don't want to, I think we can skip that.
Which one?
Or if you
Link
want to, you can
Pharma.
probably discuss
Link,
that.
yeah, Link Pharma, right? Link Pharma came.
Yeah.
Yeah, it is also consolidating, forming a rounding base actually. Uh, Very poor earnings. It has an EPS strength of 3.
No, you're looking at a different one. Lincoln Pharma, Thoviti. LINCOLN Pharmaceuticals. Lincoln Pharmaceuticals.
Oh, sorry. Uh,
The results came in yesterday. I mean, I'm not tracking this, so not sure.
yeah. Yes, yes. 80%, 81%, 81 EPS growth is
Yeah.
there. EPS
Yeah.
strength is 81.
Correct.
I think it is that 10-week average is acting as a support in the recent base of 4 and 8 and 10-week base. This is the 10-week base, which is an also ascending base. And that 10-week average is very crucial for now. And I think it is also institutions have picked up a good chunk of percentage, 27% increase that. And the consistent earnings growth of double digit. I think we need to wait till the this current week high or the 2 week high that has to be breakout for a fresh thing. I think the stock is very systematically moving higher because every base there is at least 1, 2, 3, 4, 5 bases were there in from the December 23 to 23 or March 23 lows. So I think it is a good structure, but your stop loss must be around 600 rupees or this week low. If you enter at the this week high and if you enter about that week, and I think there is a very good earnings growth story is there. Even if you look at the ROE also, I think it is in good of 15% is also okay.
Okay, fair enough. Since we're on the topic of pharma, a couple of users have some pharma queries. Uma Shankar and Tejashwini Shinde have pharma queries on Lupin or Binto Pharma.
Lupin and Arabito Pharma both are large caps within the sector. And
Sure.
recently, Aurobindo has had some news flow in that I think there was an inspection in some of their plants. I think that have given some retracement in the Aurobindo. I think we can the band is
Thoviti, you want to share the screen so that users can understand how you are looking at it?
yes, I can share my screen now.
Yeah. So
One
I think a lot of
second.
users asked. I mean, a lot of users are asking. So let them also understand how you look at screens and charts.
Yeah, 1 second. I'll show the screen. Uh, I think, are you able to see my screen now?
Yes, completely.
So, we talked about Aravu Pharma, right?
So guys, you can view the screen, right? I think this will be a much better aspect in terms of looking at how Thoviti looks at stocks and screens and the base
Yeah,
structures, the strength, the RS strength that he's talking about. Yeah, please
yeah.
go ahead. Pratik. So sorry.
This is the rally from here, from around 400, where that Arvindo liquor scam promoters were arrested and other thing. This decline was because of that. After that, there was there is some good growth was there. So
Yeah.
it tested the previous side. This is the previous side. Okay. After that, there was a bad news from the company because there was inspection from agency. I think that because of that negative news, some production unit also stalled the production. Because of that news, it was declined for the last two
Correct.
weeks. So that is where, because it is also below the 10-week average. This red line is 20-week average. Normally, as a rule, the one of the exit rule in Wolin's methodology is 10-week, below 10-week average. You have to book the profit and don't buy a fresh thing. So it has an exit now. So it is not a fresh buy, or it's a sell rule of O'Neill methodology of 10-week, below 10-week, don't hold that stock. And you talked about the Lupin.
Lupin.
Yeah,
And in fact, there are a couple of more pharma stocks after Lupin. So.
Yeah, Lupin is at a new high. So this is the stage 1 base. Before talking about that, this is the stage 1 base.
Correct.
Yeah. So stage 1B. If you look at the boxes, there is one stage 1 base. This is the tight base. Okay. After this, it is another tight base. This is another tight base. So it rallied a lot, and the distance between this 10-week average and the current price is little expanded. That means the expansion is a little more. And if you look at, there is no weakness in the stock at all, because this highest volume after this. So that shows that there is a very huge demand for the stock, which also reflects in the funds acquisition. About 3.232% acquired by the more funds was acquired this, and the number of funds was increased to 690 funds were increased in this. That means if the institutional demand is there, the stock has more and more potential. That it's going to be more in accumulation phase on. Now look at the earnings growth in the December quarter, 2,100% of the EPS growth, which is very excellent growth rate. And there is, for a fresh buy, I think you need to wait for this kind of tight bases or this kind of base formations to be formed at currently around from this week low to around 800 levels. I think some base or some tight range will be coming soon because of there is an impulsive nature. I'll show you why it is very important to have a base formation. In the sense is, you see, look at this. It is already met the target here at the current is here. So now expect a consolidation of 23% retracement level, which is exactly around 1447% to this base. In this zone, I think Lupin may consolidate, but there is not a weakness. Remember it. It is only a tight base may form like this for the 4 weeks to 5 weeks. That's all. It may continue also. As long as this week low is protected, be in the positive side. For a fresh buy, I think wait for the base to form.
Perfect. Makes sense, Thobiti. What about JB Chemical Pharma? Shweta Agrawal has a question on that. And Jayant Kumar has a question on Biocon. So we can complete the pharma in this.
I think Biocon is not a buy, sir. I think, this JB Chemicals and Pharma has met the target of previous base. This is the previous consolidation of stage 2 base. As look at this, if you are a well-versed with the Markets with India tool, I think you know what is that base. This is the consolidation base of stage 2 for the 7 weeks, and it made after a tight after the breakup, there was a tight thing or tight base was there, tight zone was there, and it was met the target. And currently, it is retracing back. If you look at that clearly in the normal thing, JB Chemicals and Pharma. Yeah. See, this is the thing. So this will happen. So that is exactly happening. This is a shooting star, which is an inverted hammer. So it indicates that there is consolidation is going to come. Wait for that consolidation for a fresh buy. I'll give one good scanner for all the participants here. If you are using the Marketsmith India now, so go to the markets. Can I disclose it, Mayur?
Yeah, please. In fact, the chart that you just showed, Thobiti, on JB, that had
Yeah.
also a lot of accumulation of blue dots. So if you're
Yes.
assuming that you're showing the blue dot,
Yeah.
might be
Yeah. Sorry. Yeah. One sec. Yeah. That blue dot is very, very important because I would like to explain that blue dot. The blue dot emphasizes that market, the relative strength is at the new high. Am
exactly.
I right?
Exactly. And it's a precursor indicator. So once
Yeah.
the
It's
base is getting formed for any stock under consideration, hopefully
yeah.
base one or two, it gives you a
5%.
precursor indication on the right side of the base that the stock is making the right move, whether it's consolidation or flat base. And
Yes.
the
Yes.
blue base gets formed 4 or 5% below the pivot levels, giving you a good indication to
Yes.
have a look on your watch list on what stocks to probably keep.
Yes. So this is the blue list actually. These blue dots are mentioning that what Mayur just explained about that. And there is one good scanner for all the participants here in the within the MarketSmith India. I think these are the one is MarketSmith scan screens. You can build your own screener also. There is one is a blue dot. This blue dot list is the new high of the relative strength, and it is going to be with the track the stock. There is one scanner here is breakout today of the weekly base.
Correct.
So if you click this base, and you'll get a list of stocks. Okay. So today Varun Beverage has, if you look at this stock, it has broken out of a base again. See, look at this tight base of 6 weeks. That's what we are talking about. 6 to 8 week bases are very good entry points of the breakout. Look at the relative strength and all the majority of the ODL characters are meeting it. The EPS strength, the price strength is high, buyer's demand, group rank, and the earnings is double digit earnings growth, 25% ROE. What else you want? So if you, I think we track this company very closely. So look at this. These are all entry points. Here is 1, 2, 3, 4, 5. Even now it is sixth entry point now. So this is where how we can track the basis and the relative strength. Even if you look at the blue dots, how many blue dots you just count on that.
Yeah.
So
Correct.
every blue dot or every breakout, every brace breakout, and if you are a long-term investor, if you have invested in 2016 at around what is this price is 57. Now compare with the now 1300 rupees. Even in the
Yeah,
COVID low,
huge multibagger. Huge
yeah,
multibagger.
huge multiplier. And the VPL is one stock where is going to be benefit of the summer.
Correct. Keep on
Because
having
they
more
are,
Pepsi.
yes, yes. So I
Okay.
think the volumes were very high in the winter itself. The December quarter, their volumes were very high. That means in summer, much more volume is going to come.
Yeah. One more stock which has got repeated by Shubham and Prakash Varti has been SBI cards. Uh,
I'm
so
not
any view here?
comfortable. I am not comfortable with this credit card mechanism. Are you looking at any base formation, any trend in that? It's only a downtrend. There is a low. Another low was formed here now. After this low, this is a low, major low, another major low this week, and
Correct.
before this low also, below this low also, and there absolutely there is a very big. This is the distribution completely, very big volume selling, and there is no strength, there is no buyer demand. I am not comfortable buying at this level unless if you are looking at the buy point around this level 650 to 689 loans. I'm expecting to form a base at around that level. Until then, I think there is no chance for that. Yeah, 1 second. Yeah. Uh,
Yeah, I think it's a bad technical chart. RS
Yeah,
ratings have
yeah,
gone
it's
off.
very bad. I think
Earnings are not
that's all.
coming up.
So
Exactly.
RSI and everything is very bad status. I think it is a better avoid stock here.
Absolutely. One query which has come, which the Prime Minister also mentioned yesterday, and which
Yeah,
had beleaguered all investors for a long, long time, Toviti is
yeah.
LIC. Your views on LIC?
Yes, LIC is above the listing price now. And it's a disclosure. I'm holding this stock, and recently recommended in several other companies, because this is what we are talking about, the listing base, IPO base. If you look at this, even if you allow a small normal technical analysis also, it's an inverted head and shoulder, which is very bullish, and it is above the listing price. You can call it as a completely, this is the whole listing base. Now look at this blue dot, which is high relative strength and meeting all the O'Neill characters. There is 100% O'Neill characters here.
Yeah.
100%, there is no accumulate this stock. Whatever the losses you accumulated in this stock because of the IPO allotment, I think it is time to accumulate. I think next, because there are several companies. Recently, government has permitted to acquire some stakes in several companies by LIC. I don't want to name them. So that is one way, because of this huge move from 600 levels to current level of 1000 1100 level, it may consolidate like this. It may form basis of tight basis or flat basis for the few weeks or something. But it has a large, from here also, I think it's a more than 100% potential in the next 1 year to 18 months period.
Oh, wow. So it's a doubler from even these levels.
Yes, 100%.
Wow.
Because Prime Minister himself recommended in the Parliament to buy the.
Absolutely. So let's get. So Tobiti, you've got time, right? Because we have overshot our time. So
Yes.
another
I
10
think
more
we can
minutes.
conclude. We can conclude in another 2-3 minutes.
Yeah. So let's take another
5:45.
5 minutes. So whatever
Yeah.
questions we can answer in the next 5 minutes, we should.
Yes.
We can probably go a little bit more quicker. So I think we can answer a few more stocks.
Sure.
Something related to our markets, Tobiti. Angel One, CDSL, BSC.
Yeah. CDSL have potential, one thing, because as long as the demat accounts are growing up, CDSL and the NSDL, that is have a Protean EJOB, these two stocks have a monopoly in that segment. I think as long as the demat account growing, these two companies will benefit. The other one is Angel One is another one which has a very large rally in the recent time. I think uh, you have Market Smith has recommended this stock earlier also. I think somewhere here or now. So now after declining below the 10-week average, but it is consolidating, it is coming back again. Retracement is coming up again. So there is no deceleration in the earnings or some else, because it is meeting all the O'Neill's criteria of 100%, and
Perfect.
even the institutions have acquired their stake, and the ROI is very good at 42%. I think it can be hold, but the patience always test you, these kind of stocks, because
Okay.
every multi-bagger will test your patience before it rallies. So you be with the stock. If you are already holding this stock, please hold this stock as a 200 DMA or 40-week average as your support. And even now, look at that last 2 weeks, the relative strength is also moving higher.
Yeah.
I think this is going to be once this consolidation base of between this and this level, I think 2720 and this level 3900, then automatically the stock target is roughly about to 4600 to 4800 zone. But wait for the consolidation. I think that breakout will give you a new opportunity.
Wow, that's nice. What about BSC or CDSL? Any of these?
Yeah, CDSL, we just discussed it. BSC has the only listed stock exchange, uh, not MCX also listed exchange, but they are into the commodity. You are talked about the explaining the base. Look at this is the base of the stage one.
Yeah.
Where the 9 weeks base is there, it is trading at just 4% to the pivot. So anything below 5% of the from the pivot is keep it in our watch list. Once this breakout happens, the rally from here to here, and the potential is 100% extension of this rally. That means from here, what is this 406 to this 2600? That means 2200 rupees. So
Correct.
the rally from which June 23 to This rally is just June to 600 6 months rally. So expect that next 6 months, if you break out after the breakout, at least 60% of this move will come. That means I think 1200 rupees to 1300 rupees rally once this breakout happens in the
Oh,
next 6 to 8 months.
wow.
That is the
Uh,
potential.
wow. Wow. Let's
So I'll
end
show you
this.
that why I'm very because there is disclosure. It is there is we have recommended one or two thing here. So 1 second. Sorry. How to calculate the target is there is one method is extension level. This is the base and sorry. Yeah. So this consolidated. So this is the potential target. But before that, it moves once this breakout happened 2500 level, and then you can reach this the 33
Wow.
level, which is the minimum target for once this breakout happens.
Wow. Makes sense. So let's end this
So
discussion with
that's why
one
I
last
calculate.
piece.
Yeah,
Sorry, yes, yes.
that's why we calculate the targets in the extension levels of the breakouts.
Very informative, Toviti. One last question, and we have to end this with a PSU. I know,
Sure.
folk, there are a lot of questions, but for paucity of time, we'll take it some other time with Toviti. We'll end this with one last question. It has to be a PSU. Hudco, Toviti.
Which one, sir?
Hudco, HUDCO.
Hardcore. Yeah. We'll check on the chart itself. Uh, oh, so wow, there is very huge demand from the institutions. At the same time, 11% is little lower, but look at the rally. So I said earlier why bases and breakouts are very important. Look at this break, look at this base, and look at this tight base. And the RS is new high. So now after this huge move from here to here, there is a little break here. Just a break of this here. It's an inside bar, which is an inside bar, and the volume. Look at the volume structure, above average volumes, and there is a relative strength is at the new high. That is a blue dot shows that. I think it is this led to another 4 to 5 weeks of consolidation within that previous week's high and low, or little near to the 10-week average. That's the maximum correction may happen in this stock because there is a good earnings growth here. 14% double-digit growth is there. Uh,
Yeah.
yeah. So I think it is an accumulation once this base forms for the next, I think 4 to 5 weeks. That has to be wait.
Perfect, Toviti. I think there were a lot more questions, but paucity of time. I think we'll have
So
to
we'll
stop here.
conduct frequently. I am ready, available for the MarketSmith India because I love MarketSmith methodology. I love
Our
O'Neill.
pleasure.
I can proudly say that I am one of the O'Neill's disciples, and I follow, seriously follow the one of the methodology for the last 15 to 20 years.
And I just would add that you're one of the most successful disciples of O'Neill. And it's
Yes.
always a pleasure to have intellectuals like you are following O'Neill to the T.
Yeah.
Always a pleasure, Thoviti. We will have many more like these. I will
Thank
just
you.
end with one user who was asking about the ethanol part. See, for the ethanol part, the government has made some restrictions, but post elections and as the verdict is out, I think it should normalize because the policy cannot get reversed. It is
Yes.
only for safeguarding the sugar inventory stocks at this juncture so that sugar prices don't have a runaway in lieu of elections, right? So they don't want inflation to probably move higher for any of these soft commodities like sugar, pulses, cereals, rice. And therefore, for the sugar part, the kind of restrictions on ethanol which have come through are restricted for a certain time periodicity. Post elections, I think the policy will get normalized. And therefore, all the capacities which all the sugar companies have put forth for the distillery stroke ethanol operations should revert back to mean in the first half of the next financial year. Some pain in the next couple of quarters, but markets think and act and react 8 or 12 quarters beforehand. So I think that will largely be in the price for most sugar companies to answer your question. Coming back to Tovati, thank you so much for patiently answering about the budget, discussing sectors, discussing a whole host of stocks. And I know we exceeded our time limit. We've done almost an hour
Yeah,
and
we have
25.
doubled our time limit. Initially, we thought of 1 hour. It was extended to 2 hours. Yeah.
I think
Thank
there
you.
were some technical glitches on my part. Apologies for that. But I think thank you so much. Always a pleasure having you. Until we meet again, all the best. Take care. And you guys as well. All the best. Take care. Have a very great weekend. And see you till we meet again.
Thank you very much, Mayuresh.
Thank you.